Hey, it's Tommy from Tabular. I want to talk to you about how important the P&L is. And it's so important that that's the very first thing I want to look at when as a freelance bookkeeper, as a small business accounting professional, helping independently as on a freelance basis, helping multiple small businesses. And I come across new clients, prospective clients through introductions and referrals and all that good stuff. Um, in some ways, even before I talk to the business owner. I just want to make a quick video. We'll see how quick this is. It could be 5 minutes. It could be 50 minutes for all I know. But let's dive right in. Just a few bullet points on this jazzy slideshow I made. It's literally 2 slides. Here we go. Why I look at the P&L first. P&L, profit and loss statement, income statement. It's all the same. We have accounting has been around for 400 years at the very least. And there's a lot of words that's just being tossed around, but it's pretty much synonymous. The P&L tells a story of why and how the business exists. Point number 1 is very important, as it should be. The reason why I just alluded to why I want to even see the P&L before I talk to the business owner first is the business owner is gonna tell me, it's that he or she is a person, and there's gonna be stories, and it's almost like I'd rather read the book first than see the movie. Talking to the person is like seeing the movie, kind of ruins it if I see the movie first then I read the book. The book has a lot more information. Who would have known? It's a little different in the book. Who would have known? The P&L tells a story, and I love saying story, narrative. I gotta be the most emotional accounting professional here in New York City. But I love saying that because there is a story, a narrative of ups and downs and adventures and crisis and success and losses and wins. The P&L tells that story. First of all, why does this business exist? Does it need to exist? I sound like Jerry Seinfeld. Why does it exist? No. It absolutely needs to exist if there's revenue, if there's income, if there's sales, if there's customers and clients who will pay their hard-earned money to be your customer, to be your client. That's the reason why it exists. If there's no sales, if there's no revenue, then why? Or if it's very, very dismal revenue, then why are you around? Maybe you should reconsider why this business is around. And how it exists is pretty much the marriage, the combination, the putting together of the profit and the losses, the income and expenses. All right. And you can't, it's 30 seconds, maybe 2 minutes at most, looking at the P&L. You get that. Okay, I get the story. All right. As opposed to, someone telling me, how long was it going to take? It's a conference call. You have to schedule that. You have to dial in. Can you tell I don't really like people. I like numbers better. No, it's all just for fun. Number 2. Number two, the organization of the P&L is usually a good quality indicator, a quality indicator, if you say so. If I say a good quality indicator of the bookkeeping and accounting. So what I mean by this is, I thought of this as an analogy. Let's say I was running a auto maintenance shop. Just a generic auto maintenance, just, oil changes and that kind of stuff. Nothing crazy, right? And this car comes in, and I'm just doing a quick look at it. I'm not even popping up the hood or looking under the car, putting that car over the thing where you go under and look under it, whatever. I'm not doing that. I'm not doing an in-depth interrogation of the owner. I'm not looking at the odometer. No. I'm just looking at the outside of the car. And I'm looking at its tires. Tires are probably the very little I know about auto maintenance. Tires are probably one of the quickest ways to judge a car by its cover, a book by its cover. Am I getting that thing wrong? But no, if the tires are kind of like worn out, barely any tread left, then it's like, I wonder how bad the rest of the car is. You know, if there's if the bookkeeper has taken good care, if the point accounting person, the main person in charge of the regular accounting of that company, has taken good care of the P&L, that's usually an indicator, a quality indicator, a reliable indicator of the rest of the whole accounting and procedures and checklists and checks and balances and steps taken care of, bank recs and payroll. That's usually a good indicator. Because if the P&L is in bad shape, then you know the rest of the bookkeeping and accounting probably is in equally bad or even worse shape. It's kind of surprising how there's usually no mediocre bookkeeping done as I come across, new companies and their books and just examining their books, examining their financials, their P&Ls, their balance sheet, everything. And when I see a P&L, it's just, it's like this is a crime scene. This is bad. We gotta figure this out. Or it's like, no, the P&L looks great. It's well organized. It's sensible. It's clean. It's any person who's has half a brain about business will kind of figure out what's going on here. It's that easy. And it's kind of crazy how there's a stark contrast between good bookkeeping, good accounting, bad bookkeeping, bad accounting. There's usually nothing in the middle, because I feel like the good ones, the good bookkeepers, good accountants, overall everything's running on all cylinders, going back to the car analogy. Like P&L looks great, payroll posting, revenue recognition, the whole thing from POS sales, register to into the P&L statement, everything, and all the expenses, everything. It's organized. There's tiers, there's sub accounts, there's numerating the GNL, numerating the income accounts, there's numerating the expense accounts, so on and so forth. The G&A stuff is where it should be. It's all put together some sensible way. Good stuff, good people, they usually, it starts off good. There's usually not too much in between. It's usually really bad. If it's not good, it's usually bad. I don't know. That's just my off-the-cuff, quick judgment. Number 3, since the P&L is the most important and simplest accounting tool for a business owner, it can be a reflection of their attitude towards accounting, organization, discipline, and growth. This is more for my people out there, other freelance bookkeepers, accountants, finance professionals, even in-house people out there who handle more than one set of books. You have to kind of understand what kind of, just the business, especially small businesses, it's done by crazy people. Let's just say that. Small business owners are my favorite kind of people, but also they're my favorite kind of crazy people, because they actually believe that they can change the world. And I want to work with, ideally, and I think every bookkeeper, accountant will agree with me, I want to work with crazy people who will do crazy things, who, create jobs, live the American dream, overcome all these odds and, be successful. And I would love to service. I would love to help them. I would love to watch them grow. But it's also like, if I see their P&L, if I'm taking over and coming in as the new bookkeeper, and I see where their P&L is, then it's got to be some level of their attitude towards accounting, towards measuring things, recording things, organizing, keeping things neat, keeping things structured and ordered, and growth and sales reports and all that. Like, as nerdy and geeky as that sounds, it's life or death, literally, for a business. And you can't get more important and simple in terms of accounting or tools, accounting reports, as the P&L. How much money did you make last month? Very simple question. You can bring it down to the penny, for a small business. How much money did you spend last month? To the penny. It's simple. And what did you have left over last month? It's a simple question. The bad bookkeepers, the bad apples out there, the bad bookkeepers, bad accountants, they'll just run around. Well, but I haven't. Well, just if it's anywhere between up to, say, the 5th, the 10th, even, depending on the kind of business and how many transactions there are and the complexity of the transactions, of course. But I'd say, like, even at the extreme end, the 10th, you should get the books closed for the prior month. And you should be able to say, this business made X amount of dollars in terms of revenue last month, Y amount of dollars in terms of expenses, and Z amount of net income. Simple as that. That's all it is. And I can't understand small business owners, along with these bad apple, bad agent bookkeepers, accountants out there, who just can't get their heads wrapped around the concept of how the P&L, it is truly the most important and the simplest accounting tool that I believe that every business owner should be looking at on a regular basis. Maybe if you're a freelancer, maybe if you're just running a consulting practice yourself, you don't need to really look at that every month, maybe, but just even every quarter, it's good to look at the past 3 months. I'm just saying. What do I know? I've only been doing this for, just a few years. I don't know. Just being passive aggressive, trying to have fun with this. All right, here we go. So I set up a dummy company. But I didn't want to call it a dummy company because it's 2019. We're all being careful here, right, with what we say. So I called this purely for testing, incorporating. Yay! Here we go. So here we have is just your staple QuickBooks Online dashboard screen. Let me see where the heck is my mouth? All right, so this is one thing I love about QuickBooks, because they understand me, and I feel like they understand me. I feel like they get me into it. I feel like you get me, because I love to do this. Boink. Just hide that fucking atrocity. I hate seeing that screen. It's fucking useless. I'm sorry. It's freaking useless. Okay, reports. We're going to go straight into reports. Let's just say this prospective company, client, new company, I'm just helping them out. I'm just perusing, taking a look at their books, all right? Literally got to me today, just now, purely for testing incorporated. I'm just going to jump right in. The very first thing, I'm just going to look at the P&L. Reports, boom. Profit and loss, boom. All right, today's the 3rd of September. It shows up August. There's nothing for August. That's interesting. All right, I'm going to give them a pass on this. Maybe nothing's booked for August. I have no idea what this company does. I have no idea what kind of business it's in, if it's a service or if it sells goods, if it's retail, whatever it is. I don't care for now, but I will be harsh on them for the prior month. Let's see if there's anything good here. Boom. Now we're getting somewhere, all right? So we got a P&L for July. And here's one thing I like to do in these situations. Sort by descending order. So it'll automatically bring up the items that have the largest and then descend from there. Same thing with the expenses. You get the point. So let's just say hypothetically, for this game, I can't click into these line items. I can't click into these details, right? Let's just say I'm just going to make quick observations, deductions. Not deductions is a bad word. That's for tax. Quick observations and insights and conclusions just based off this simple P&L. All right, here we go. First off, the income. I love it because it's divided to by products. That's awesome. Even if you'd be surprised at how many companies I've been to where they don't do this or they do this in such a half-assed way, where someone, and it's almost like bookkeeper from bookkeeper to bookkeeper. You know, some businesses, they just have a new bookkeeper every year. They can't seem to be in attract someone to, for that. But still, even if they have, let's just say, assume that this company had, a handful of bookkeepers the last few years, and let's say that assume that they have all done a decent job, but someone had the wherewithal to split up the income, not just to have one bucket of this is the money that came in, yay, we're rich. But no, they decided it'd be good for the business and the business owner and the managers, if there are managers, the sales manager, the operations, even the accounting people. Maybe there's a CFO somewhere. But definitely there's got to be a tax accountant somewhere, and maybe there's not just one owner, but there's partners and there's investors. So who knows? Maybe it's just one head honcho running the whole damn show. Maybe there's a lot of different people who have stake in the performance of this business. So it'd be good to show different products and services and how they're performing. That's a genius. That's amazing. Oh my goodness, how'd you think of that? So that's a good sign. I like this a lot. And I would like to also point out that if the cost of goods sold, if the cost associated with the materials and things needed to, which are what I assume job supplies is would also be split between these things. Sometimes it's not that easy though. Then we're getting to job costing. Then we're getting into direct costs and indirect costs. So that's a whole another can of worms. But I get it. This is what they thought was reasonable, and this is where, they're going to keep going with this. It's good. It's a good sign. And we got, just right off the bat, $48K total income, $40K and change total expenses. That makes sense. You're making a little bit more than you're spending. So nothing's upside down. You'd be surprised at how many times I've seen, a business where nothing with income expenses, like just up the roof, and then it's just the labeling. See, the labels here are clear. Job supplies, salary and wages. And you think that the two categories that take most of the expenses for most business these days are the supplies and paying their people. That's really what it is, And the categories in terms of the percentage or the ratio of how much it takes over the total expenses or against the quote gross profit, just, it should be smaller. The salary and wages should be smaller than the income, right? Just sensible, just easy, just very simple. And you got a slew of G&A, general and administrative expenses put together. This is beautiful. Office supplies, rent, insurance, payroll, taxes and fees, legal and professional. And another quick point is, I love how this is separated, salary and wages with payroll and tax and fees. That's a good sign. Of course, a bad sign here is everything is ending in rounding numbers, so you think that this is obviously a fake thing. Is this a dummy company? But no, that's really the heart of good bookkeeping, the heart of good accounting, organizing for a small business in terms of the reports, in terms of the P&L, is just making it simple, making it clear. It's compliant with GAAP. It's easy for the tax accountant to see which categories and how to report it in terms of the tax returns, so on and so forth. But there you go. That's how it's done. It is absolutely important to judge a book by its cover in bookkeeping and accounting, because certain things are more important than others. It's not important to read the whole damn book. In accounting, is sometimes you just need to look at the P&L. You see the P&L, you see how the person who's in the front seat of the bookkeeping and accounting, how they did it, and you also kind of get a sense of how the business owner, him or herself, sees and how they value the P&L and how they value accounting overall. I hope this has been helpful for you. This is definitely helpful for me in terms of a little exercise and presenting this. And go out there and stay organized. Peace.